So a cost that is fixed within a range of activity but jumps to a new level when activity passes a certain point, as we said earlier, using the 0 to the 5,000. So when your activity level increase, the fixed cost will also increase. Semi-fixed cost, so a cost that has both fixed and a variable component. For example, factory electricity bill. So this factory electricity bill, the fixed part is $100 monthly service charge. The variable part is what? 10 cents per hour. So if we work every hour, we are going to incur electricity bill of what? 10 cents. That means if we did not produce at all, the electricity bill will just be $100. But if we are producing, then this place will also be increasing. So part of it is fixed and part of it varies. And anytime that a question is given to you and we have a semi-fixed cost, before you do your analysis, you should be able to decouple them into fixed cost and a variable cost, because the two of them will be given to you together. And in the next video, we are going to work on that. So when it comes to the non-production cost, all the costs that we listed at the top, they are all production costs. Then the non-production costs are the costs that are not directly involved in the production. For example, salesman commission. Somebody going to the field to sell that has nothing to do with the production cost. Advertisement has nothing to do with the production cost. Administrative costs, all those things has nothing to do with what? The production cost of a unit. Now, all this cost that we are talking about, you will be asked to prepare a cost card. So the cost card usually show the cost of one unit per unit. So let's see how a typical cost card look like. So in a cost card, we are going to have our direct material, cost. So direct material cost will be given. Then we have the direct labor cost. Then we have our direct expenses. And if you add all the direct elements of cost, what you get, we call it prime cost. So this is prime cost. The prime cost is the aggregation of all the direct elements of cost. Then here we also have our variable overhead. So we have our variable overhead cost here. So when we add our variable cost, then we have our total variable cost, because all those costs, they are all variables. Then we have our fixed cost. So the fixed cost will always be absorbed. So fixed cost. So when we add our fixed cost to it, then we are going to get cost of production or production cost. Then we move to the non-production cost. So non-production cost. So at the non-production cost, we have administrative cost, we can have selling and distribution, then we can also have marketing maybe and promotion, and we can have more. It doesn't mean that this is all the costs that we can have. So when you add this to this, so let me make this one A and make this place, so we can get a total of all these costs here, and when we add it to the top, so this one is B, so here will be A plus B. So when you add it, then we get our total cost. So basically this is how a cost card look like. So you have your direct material. Sometimes in exam they can give you just variable cost straightforward, which include all variable elements of cost at the top here. So if you have any question, you put it in the comment section. In our next video, we are going to take a calculation and see how we can separate a fixed cost from a variable cost, and we also look at how to work on a step fixed cost. Bye for now. See you in the next video.